live. Perfect. Oh, notifications coming through.
Are you going to check that everything's okay? Because obviously Facebook, it went down last time, didn't it?
Yeah, I'm going to keep an eye on it tonight. So, yes, good evening, everybody. Hope you're all well. Thank you for joining us. This evening, we are doing our live topic, which we do every Thursday at 8 o'clock here on most of our social platforms. So this evening, we are on YouTube, we are on Facebook on our Go Mortgage page, and on Mortgage Advice Helps, Hints and Tips group. We're also on the Chris Days Facebook page as well as Instagram. So good evening from wherever you are watching this evening. Hope you're all well. This evening's live topic is with Chris Days down at the bottom. He is the owner and mortgage broker at Go Mortgage. And then slap bang in the middle, we have Mark Evans from Fresh Money. And Mark is here to discuss all things secure loans, bridging loans. If those two things are things that you've never heard of before in your life, then listen up. You might find that there's something here for you. If there is anybody watching that feels that this could be something that they're looking into, whether they're looking to do some refurbs in the house, they need to clear up some money, this could be an option for you. So what I'm going to do, Mark, I'm going to just check that we are live on all our platforms. But while I'm doing that, do you want to just introduce yourself and tell us a bit about what it is that you actually do?
Of course. Hi, everyone. So my name's Mark from Fresh Money. We do secured loans, which I would probably best describe as like a mini mortgage, which sits behind your existing mortgage on a property. They're very useful if you're doing debt consolidation. We find, like with Chris, it works in tandem. So if you're in, say, a fixed rate on your mortgage, and that fixed rate has got maybe 2-3 years left on it, but you've got yourself into a bit of a pickle, you've maybe taken out quite a few credit cards, loans, and it's all becoming a bit too much, a secured loan is quite a good way to grab those debts, put them into one place and pay a much lower monthly repayment. So as an example, this week, I had a lady and a gentleman that were paying out probably about £1,500 in credit card debt, which is about 50,000 credit cards and loans. So we got that debt, put it into a secured loan, and then they're paying around about £500 a month now. So they're saving £1,000 a month, which is massive when you think about the cost of living and the struggles that we're all going through. But the nice thing with doing a secured loan is it's a stepping stone. It's a short-term fix to get you in a good position again. And then people like Chris, your mortgage brokers, will get you out of that secured loan when things are better, or your finances are in a better position, or your fixed rate's coming to an end. So it's a great little stepping stone, I think. I love doing what I do. We also do a bit of bridging finance. Again, we'll talk about that later if anyone's got any questions about bridging finance. But predominantly what I do is secureds day in, day out. Does that help?
Yeah,
it does. Yes. Yeah. I'm not up to date on Chris. Chris, have you gone live? Can you see that it's gone live on your page? Sorry.
Yeah.
It's on yours.
Yeah, Chris Days, Go Mortgage, and the group.
Yeah, okay, fine. It wasn't. Oh, there it is. Just
No.
I've found it. Perfect. So if anybody, wherever you are watching from, good evening. And if you have any questions, doesn't have to be all for Mark. It can be given to Chris as well. If anybody's got any questions for either of the guys this evening, please pop them in the comments in whichever platform you are working from. This evening, and we will get them on the screen and we will get them answered for you. If you are on any platforms, let us know where you're watching from this evening. So far I can see YouTube is winning on our viewers this evening so far on the amount that we've got, which is nice. Hello there. Thank you for watching. And we're going to be here for about half an hour to 40 minutes answering any questions that you might have. In regards to anything, mortgages, remortgages, interest rates, deposits, first-time buyers, secured loans, bridging loans, anything that you feel that you might be struggling with, you need some guidance on, the guys are here to give you as much info and advice and any tips.
As well, Joy, for me and Chris as well, credit file education, stuff like that. You know, whenever I go through a secured loan or we go through bridging finance, it's really important that the customer understands when we go through the credit files with them how to get out of that position. So if you guys have got any questions about credit files, how credit cards affect it, maxing out items like overdrafts, fixing, getting yourself on the voters roll, all those kind of things will have an impact when it comes to getting the best rates mortgage wise, unsecured loan wise, secured loan wise. So credit files do have a big impact. So if you've got any questions about that sort of stuff, we'll both be happy to help on that side as well.
Perfect.
I've got a question for you.
For me?
Yeah.
Okay, I'll try.
What are you wearing? No.
This is how it works.
Obviously, affordability-wise, how would a secured loan differ from a mortgage?
So a mortgage is so many times your salary. So if you're on 20 grand and you get 4.5 times your salary, you're up to sort of 100 grand-ish on a mortgage. Secureds are different in the fact that it's just a simple income and expenditure form. So we just get your net income, and then we just take away gas, electric, council tax, any expenditures that's not been included, like credit cards and loans. And then it gives us enough free cash then to make sure you can afford the loan. So in a way, it differs from mortgages in the fact that it's a true income and expenditure to make sure that the customer can afford it. And then the lenders all build in like a stress test, which means that if the mortgage rates were to rise or gas and electric bills are to rise, there's a little buffer built into that sort of affordability check.
So the point I was going to get at is, like, if someone's going for like a remortgage with a further advance, but their affordability don't meet with a mortgage lender, potentially it could still fit with a secured loan.
Definitely,
so they could do like a product switch or a remortgage, not borrow any extra money, and then do a secured loan to consolidate debt or for home improvements. So even if it doesn't fit on a mortgage, it doesn't mean they can't borrow extra money, does it?
No, 100%. So that's so much of the business I get from. So a lot of the stuff I get is from mortgage brokers, where they've got customers that are perhaps stuck in this little world where they can't get enough to refinance, and then they'll do a product transfer. So they'll stay with the current mortgage company they're with, but then they'll do some debt consolidation to get things back on track again. So that's loads of that. Yeah.
So, like, from our point of view, when we're doing a remortgage, typically it probably takes like 4 to 8 weeks.
Yeah.
Secured loan wise, it's miles quicker, isn't it?
Yeah, crazy. Some secured loan lenders can be done in days. I would say the average secured loan turnaround time is about 10 to 14 days. So obviously, if you've got, even if we got you, all your debts were due out on the first of the month, and you came to me and we did a bit of a debt consolidation deal, there is potential to get that deal done within a couple of weeks before even all the credit cards are due out again. So again, you'd save maybe £500-600 just in that month alone.
Yeah.
It's really quick.
I've got a question. How does like the repayment process work with it?
Well, the reason that secured loans can be very cost effective is that, because I was saying at the start, they're like a mini mortgage, so you can flex the terms a bit more than you can do on a personal loan. So if you went to a personal loan, you'd go to Sainsbury's, First Direct or whatever, and you'd borrow, let's say 25,000, and you'd do that over a 6-7 year max period. With secured, it's different. You can spread it over a longer period of time, 15, 20, 25 years. Okay. But again, it can all work towards how you feel. So the problem you've got is if you spread it over 20, 25 years, it's almost like having a very large credit card, because you're mainly paying interest in the first few years of the agreement. So it's working out with the customer each time what's more beneficial to them. Is it to try and reduce their outgoings right now, or do you want to get everything to one place and then pay it off with a time frame, say 10, 15 years? So that's the difference really, is you can spread it over a longer period of time, release the pressure if you're under any financial pressure, but also if it is just a stepping stone, you can do a 2-3 year secured loan and then flip it into a remortgage in the future. So
it's 25 years the longest that anyone will do, so it's not like a mortgage where you can go 30, 35, 40 years.
Some lenders will do 30, so go up to 75. They tend to be, I don't know if it's the same as mortgage world, but they tend to want to see sort of proof of income into retirement. So normally most of the secured loans I do, I'll probably take them up to the age of 68, 69, 70. And then we don't need to go through the hassle of pulling out retirement income and stuff.
Yeah.
In regards to actually sort of starting a process of doing a secured loan, is it similar to the process of what a broker would ask for you in regards to starting applying for a mortgage, in regards to the paperwork, and is it all the similar stuff to that as well?
There's some of the nice things that you don't have with secured loan world is you don't need to get normally bank statements. So a lot of them use something called OMS data, so you don't need as much information. So normally it's like a couple of pay slips or your tax counts, tax overviews if you're self-employed, some identification, passport, driving license. Process-wise, application-wise, it's probably the same process that Chris goes through with his clients. So it's a bit of a fact find, takes about 30, 35 minutes over the phone, soft credit check. So we can have a look through the credit file together, and then we score it through the system, and the system will come back with the best rate, similar to probably what Chris does with his mortgages. It'll just come back to us with the best deals that are appropriate for the customer at the time.
Right. Okay.
How many, so like with us, we've got over 100 lenders. I take it there's less options for a secured loan, but
yeah,
typically how many have you got access to?
I would say there's 12 lenders, so it's pretty simple stuff really, which is why you do what you do and I do what I do. Keep it simple. Lenders. So it's quite a simple market really. I kind of know when I've got to the end of a phone call and I've run the credit check and the affordability, I'll know where I'm going to probably place it without running it through the system, because I'll know what the customer needs, you know, proof wise, income wise, whatever it might be.
Okay. In regards to it, obviously not being a mortgage and it being classed like a loan, are there any like risks to it?
Of course, because it is secured loan, you're still at risk of the house being repossessed. As far as I know, with most things in the secured world, they would need permission from the first mortgagee, because they're the largest sort of lender on the property if it was ever to go to repossession. But I have known in the past that secured loan companies have been able to get properties repossessed for non-payment. So you need to be careful, because it is going to use some equity out of your property. And obviously your home's at risk if you don't make repayments, just like a mortgage really.
Yeah.
Does a secure loan lender have contact with the lender of a mortgage that you might have on the property already then?
Probably not. You request consent sometimes. So when a mortgage company applies for your property, they'll put something on the land registry, and some of them will say, we want consent. There's a restriction here. You need to ask our permission before you can do a secured loan. So some require consent. The only time consent is normally declined is if you're in high mortgage arrears.
Does it also differ with the loan to value? So if you go right up to the maximum loan to value, does that make a difference or not?
No, so there's lenders in the market, believe it or not, they'll go to 100% loan to value. The problem you've got, and it's the same with the mortgage world, if you go to these lenders, you're going to be paying a premium rate on it, because the risk is there for the fact that the lender is at risk as well. So you're probably looking at sort of high-end LTVs are probably around about 15, 19% loan to value. And as you go down the scale, obviously your rate's coming down to like 6.5% at the moment.
So what would Joe Bloggs look to do with a secured loan? For what reason would they realistically, or could they be looking to get a secured loan for?
A lot of the stuff that I do is debt consolidation, so loads of that. Also home improvements. So what's happening, and you probably see this loads, is somebody starts a double-story extension. They've been told it's going to cost 40 grand, and they get to the point where they're halfway through the extension, they've got no kitchen, no bathroom, and then it's like, well, we need another 30 grand to get it finished. So at that point, the customer's in a real pickle. How are we going to get this extension sorted? If you can't get a personal loan, then a secured loan is a great way to do things, because you can go get the money, get the property finished, add value to your property because of the extension or whatever you've done to it. So yeah, I do a lot of that as well. A lot of it can just be credit repair. So again, there are lenders out there that will look for people that have got adverse credit. So there's obviously at some point in time, people have a problem, be it with them at work or something that causes them to have some sort of financial issue. But most of the time, there's a genuine reason for that. And there are lenders that will look at that in isolation and then give them an opportunity to borrow again. And it's not just borrowing maybe 5,000, 6,000, we're talking 25, 30, 35,000. So it gives people an opportunity to get back on track again and really repair the credit file and get things moving.
Give them a bit of breathing space as well.
Yeah, definitely, mate. Yeah.
Okay. Well, we've had a question come in. So I'm going to pop it on the screen. Wow, that just covers your face, Chris.
Good.
Hi, guys. What is the best credit check site to look at for looking at a secure loan or a mortgage? Is Experian the best one? Also, what's the average credit score that is acceptable for a secured loan and or a mortgage? Cheers.
Go on, Joy. You answer the first bit.
What's the best credit check site to look at for looking at a secure loan and mortgage? Check My File is the only one really that a mortgage would take because
Why?
Because they check 3 credit agencies, not just one. So they use Experian, they use Equifax and TransUnion. So it gives you a better understanding of your credit report rather than just having ClearScore might tell you you're amazing. But when you put it into Check My File, because there's 3 agencies, they'll actually give you a more realistic answer.
Yeah, and the thing is, like, more and more lenders now are using more than one credit reference agency. So if you're just looking at Experian, like you say, there could well be other things that are logged on the other agencies that you don't know about. And we've had it several times over the past few weeks where people think they've got a 999 credit score, go to get a mortgage, get declined, and they've actually got a 400 odd credit score on Check My File based on the fact that there's defaults or CCJs registered on the other agencies.
Wow.
So from our point of view, that's what we use. In regards to like credit scoring for a mortgage, obviously if you want to go to a high street lender, you need to have a good credit score. So I would say if you're looking at Check My File, anything over 650 should be all right for a high street lender. But if there is adverse credit, there are lenders that don't look at the credit score. They'll look at what's physically on the report as opposed to what the score is. So if you've got a really, really bad credit score, don't think you won't get a mortgage. You just might need a bigger deposit. So yeah, there's lots of options. Obviously, I can't speak on behalf of Mark on the secured loans, so you can answer that, mate.
Yeah, it's pretty much the same, to be fair, because if you think about it in my world, it's the same but with less lenders.
Yeah.
But your better rated stuff, you're going to need a good credit score for that and a bit more equity. But as you say about lenders, there are lenders that they don't care about credit score. They just want to see a nice trend, so people going in the right direction. If you saw somebody that was going 1, 2, 3 in mortgage arrears, and you had all the credit going into spiraling downwards, that's someone that's in financial distress. You don't really want to be lending to them because they could be struggling just to pay the mortgage. So there are lenders out there that will look at all sorts. I mean, people that have got an IVA, people in debt management plans, because don't forget they've got security on the property, so they're willing to take more risk with people that perhaps have had some adverse credits or problems in the past. So yeah, there's always options. The only thing I would say you may struggle with secured wise is if you're in mortgage arrears currently and you haven't made the last 2 payments on your mortgage. There's not many sort of lenders out there that will look to risk anything whilst you're in mortgage arrears and you're not making the current payments.
Same with mortgage. You're going to need probably 12 months clear history.
Oh yeah, on a mortgage for sure, yeah.
And would a secure loan affect a remortgage?
Potentially. So I suppose the thought process. Yeah, so two things. Obviously, it's the equity. So obviously, from Chris's side of things, if I take somebody to 90 to 95% loan to value with a secured loan, what mortgage lenders are out there that can do 90 to 95%? So it limits the market, I suppose, the more equity you take out of your property, because there's more lenders available to Chris with more sort of, if he's got more equity, he's got more lenders he can go to. So you've just got to be careful. And I always try and guide people through that process when we chat to them about things, because it's important you don't max out all your equity, because that's your side of the property. That's where you're going to make your money from.
Yeah, definitely.
Okay.
Is it hailstone again where you are?
Yeah, it's
No
like
way.
a very heavy rain shower, and I just hear it. Literally, it's like it's here, like it's right here. So apologies if you can hear this lovely rainstorm I'm having here in Wales. Warren says, "Thanks, guys, much appreciated. Very clear."
Thanks, Warren. I've not had any tea, mate, so I can order an extra big breakfast in the morning.
Oh, that sounds good.
He said he's treating me to breakfast, so.
You said he's treating me to breakfast.
Ooh,
So no tea, no breakfast,
tell you.
Nice.
and I'm bringing you gecko, mate. Anyway,
Gecko? Come, blimey. So in regards to let's talk. So what sort of, do you want to run down what documents? If I rang you up and said, Mark, what do I need? Talk me through it.
Again, it's normally pretty straightforward. It's just proof of identification. Some don't even need proof of ID anymore, but from my records, I probably would need something on there for just anti-money laundering. Proof of income normally, wage slips.
Is that the same for self-employed?
It's normally different. So you can either get an accountant certificate or you can do tax calculations, tax overviews. There is one lender that will allow limited company directors to use wage slips as opposed to using the tax calcs, tax overviews. So again, it's an unusual situation, but it works sometimes.
Okay.
yeah.
Because I know, like with self-employed books, like we say that you can use 1 year. Some lenders will take 1 year worth of books. Is that the same for
Yeah.
or is it more or less?
A lot of it's on referral, really. So some lenders will have policy where it's got to be 2 years self-employed. Some lenders will be year self-employed, first year traded. So again, similar to the mortgage world, we can find a home for it for sure. The only ones we struggle with is probably someone that's not done the first 12 months in self-employment.
Yeah. That makes sense. I'm just checking on some of our feeds just to see if there's any questions coming in.
Whilst you're doing that, what about bridging the mark? Obviously, we've not touched on that. I know you don't want to spend loads of time on the bridging, but
I don't mind bridging's. Again, it's a means to an end, and I do a lot of bridging where people are perhaps downsizing, or you might get property developers that want to do a property, flip it, sell it. So bridging is really good in some ways, and I think a lot of people are scared about rates and fees that are involved. But you know what? I don't think it's too bad, so long as you're not in the realms of a large bridge, because large bridging comes with a large cost in fees and interest. But again, if you're just buying and flipping property, it's really good for people that want to downsize and perhaps they're a little bit older, so in the 70s and stuff, and they can't get a natural mortgage to buy the next property. You can bridge from one property to another, quite straightforward. And again, the costs, I don't think the costs are too bad at all, really.
And are they all 75% loan to value, or are the lenders that will do it a higher loan to value?
They are 75% loan to value, but it's on the gross loan. So I would suggest that most bridging is, if you're going to look at it as me and you would look at it on net loan, I would say most is 65% realistically.
By the time all the costs and everything will come off.
Yeah. So what they do is it's a bit like they roll everything into the deal. So let's say, for instance, you borrow 100,000, but the bridging costs, which could include a product fee and interest, which is rolled in every month, that comes to, let's say, 115,000. That's what you'd pay at the end of the bridge. But the way it works is that the lender will work out what the gross loan is at the very beginning. Okay. So the LTV is actually not as good as you think it is at 75%. It's actually probably 65.
Right.
We've had a question come in from Instagram, which I'm just going to post. So this is from Vel21 and her too. After valuation, we are already concerned how we're going to repay 20% of the property value back. What do you think about house prices in 2 years and this scheme? Was it worth it? We've got 46,000 via Help to Buy.
I hate Help to Buy.
Same.
Help to Buy is the biggest load of shit ever, pardon my French.
Yeah.
Sorry, Joey. Just because, for that reason, I mean, a lot of people got into houses which are bigger than they would normally be able to afford,
Yeah.
and they just sold a dream on a new build house and a lovely house, but not really understanding what impact it's going to have 5 years down the line. So whilst it's all well and good, because the interest rate or the interest payments payable when the 5 years finishes are low, but people don't realise that it's 20% of the value they've got to pay back. So I get lots of people all the time saying, when should we do it? And it's like ASAP, because every year you leave it and it's going up in value, you're going to pay more back. But if you can imagine that adding 20% onto your mortgage, what impact that has to the monthly payments, it's going to make a massive difference. And for a lot of people, it's unaffordable. So adding 20%, especially whilst rates have gone up over the last 5 years, people can't afford to pay it off because they can't afford it. So for me, it's a load of crap.
Yeah.
Sorry.
Yeah, I'd say the same. It feels almost like some people are trapped.
It's false.
Yeah, it is. It's difficult because obviously even when they come to remortgage and you start looking at income multiples to raise the 20% to pay the Help to Buy, you've got to then forward 20% extra on your mortgage. It's not.
It's just unaffordable for people.
Yeah, it's not good.
Or again, people then might have to sell the house, but obviously if they're then used to living in a certain size property or in a certain area, if they take 20% off what they're going to be buying on, house prices have gone up in the last 5 years.
Yeah.
People would be like downsizing or moving to a worse area. And so like really that's not right for a lot of people either.
Yeah.
So yeah, obviously there's a lot of people that are going to be in the same situation where really like the best advice would be is to get it repaid as soon as you can.
Yeah, before it goes up anymore.
But it's got to be affordable. Yeah, because like say if you wait another 5 years, house prices could have gone up a hell of a lot more, and then obviously you're going to be paying a lot more back.
Yeah, and again, a lot of people probably fixed it, haven't they? They've probably done a 2, 3 year, 5 year fixed on that mortgage, and then you've got to pay the penalties to get out to leave. Yeah.
Well, I hope that answered your question. Thank you for leaving it there on Instagram. There's no more on there. I'm just checking. But yeah, I feel I'm up to date on there. I did have one. I posted a story earlier. Somebody did leave a comment because they weren't able to watch, but they're going to watch this back. And let me find my comment. Bear with me a second. So their question, I think we might have touched on this a little bit. They said, hi, love the live topic chats. Don't manage to watch them live, but catch up on them, really useful. In regards to a bridging loan, what are the main factors that lenders consider when looking at eligibility?
Well, bridging ways is pretty straightforward, really. They really just care about the asset. So whatever you're going to bridge against, they want to make sure that the asset is okay. So they'll send a valuer out to make sure the property's worth what you think it's worth. As far as sort of affordability, that doesn't really come into the mix, really. The only thing a bridging firm cares about is the asset, which is the property you'll be buying or bridging against, and then your exit. So you've got to be able to exit out of the bridge, whether that's with a remortgage or selling another property to get out of the bridge. That's pretty much it. Some will do credit checks, and obviously the better rated lenders in the market will want you to be clean on the credit file side of things. But there's not a massive difference between what Chris would call high street lenders to the middle of the road people that wouldn't care too much about credit files. So really, affordability is not the worry. Credit files aren't a worry. It's just how much is the property worth and how you're getting out of it.
Okay. Well, I hope that answered your question when you actually watched this back. Thank you very much for it.
Are they all right with sale of property? Because what happens, obviously, you could do it up and then not sell it. So
yeah, a lot of the time, a lot of the lenders are quite good in the fact that if it's a slow market, which it is at the minute, they will extend. So if you've got a 12-month bridge, for instance, and you've tried to sell the property for the last 6 months, they will extend that bridge maybe for another 3 to 6 months, as long as you can show them that you're trying to sell. But I suppose is your point, if you're not going to sell the property, what's going to happen?
Yeah.
If you decide not to, you've got to be really careful.
Or the market dips and you can't sell it for some reason.
Yeah, so the extension is what you would be getting. If you just decided not to sell, you could be in a world of trouble, really, because if you've not got an exit, that asset is theirs. And
So they can just repossess.
Repossession, yeah. So for me, bridge is great as long as you know exactly how you're going to get out of it.
So would you always ask for a dip for any case, even if someone's selling it? Would you ask for a dip for a buy-to-let just in case, so that you know?
So if you send me one, if you send me a customer, Chris, and your plan is to get them a remortgage when the kitchen's in or the bathroom's in. So what happens sometimes is you won't be able to get a mortgage on it because there's no working kitchen, working bathroom, whatever. So we would do a bridge for say 2 or 3 months, give the customer the chance to fit the kitchen, fit the bathroom, and then we'd expect the exit to be a remortgage out of the bridge when the property's habitable again.
Right. Okay.
Okay.
And, sorry, I've got another question.
Uh-oh.
What are you apologising for? This is why we're here.
Because I feel like other people should be asking questions and it's me. If it goes over the 12 months or it's like approaching that 12 month when you're supposed to be getting out of it,
yeah. How
does it differ with things like the monthly payments, the cost, the penalties? Does it massively increase?
It's lender dependent. They tend to put an extension fee on it, which it's not normally massive. Maybe I say it's not massive. It's probably £950 to £1,000, depending on the lender. They tend to keep the rate. Again, it's lender dependent, so they can make that choice and they can extend the rate or whatever. And some lenders might even categorically say no. So at the end of the 12 months, so then you've got to try and re-bridge. But the problem with re-bridging is it's quite expensive because you then have to go to another lender and say, look, we're struggling.
Yeah, it's already a bridge, so there's a risk.
Yeah, it's already a bridge. They're going to stick an extra fee on it. They've got interest rates to add on to it. So yeah, it's a tough one, really. But the main thing, it's happened with a few customers that I deal with where they really have tried to sell the property. They've dropped the prices and stuff. But once the prices drop and they start getting some interest, it's going to be 3 or 4 months, isn't it, till the sale completes. And that's kind of what happens. They'll extend the bridge and just pay the interest until it sells.
Right.
I have a question. What are there any fees involved when going for a secured loan or a bridge? Like obviously with a broker, you pay a broker fee. Is there any other fees?
Yeah. So one thing I would say is if you are going into the secured world, just be careful. There's a lot of, at the moment, it's large brokers that are out there and they tend to charge upwards to 10% of the advance. So if you think about that, if you borrow 50,000, these guys could charge you a £5,000 broker fee. So just be careful who you go into, what you're doing. Yes, because you've still got to pay that when you come out of the secured loan. So just be careful who you go into, ask them about fees before you get involved in it, because it's just a lot of money. Lender-wise, a lot of them charge a lender's fee, which is a bit like what you might have to pay a conveyancer anyway. So that goes from anywhere between £595 up to £1,295 as a lender's fee. And the way it normally works is they add the fees onto the loan and it's built into the monthly repayment. So you don't normally pay them up front,
right?
But they just get added to the loan. So as they get interest is charged on it.
Valuation fee?
Valuation fees, again, probably quite nice, really. A lot of the market have moved towards home track or online valuations. Again, brokers, depending on what they're doing, might charge a large broker fee and then potentially pay for the valuation for you. Or some brokers might say you pay for the valuation and do it that way, a bit like a mortgage broker or a mortgage lender would do.
Yeah, we've seen some crazy ones when I've sent you illustrations through or spoke to people. And a lot of the time, obviously, you beat them hands down, don't you?
Yeah, it's a world it is regulated. It's regulated by the FCA, and I think at the moment the FCA are looking at broker fees that are being charged in the market.
Yeah,
but yeah, it's just not fair for someone to get charged £5,000 for.
No, it's ridiculous.
Doing a 50 grand loan, it's bonkers. But again, just be mindful, be careful, because it sounds like they're saving you money, but really if you look into the detail, they could be charging a large broker fee to do what they do.
Yeah, definitely.
Perfect. We have a question from Sarah. Are bridging loans always interest only, or has this question been answered?
So bridging loans, you can, I would say you're paying interest for the bridging loan, but the way it works is you can pay it monthly, like you would do a loan, or you can retain it and obviously pay at the end. So it's all interest, if that makes sense, in the monthly payment that you're making. You're not paying anything off the balance like you would do a loan or a mortgage. The way a bridging firm makes its money is by charging a product fee, which is normally 2% of the advance, and then charges you monthly interest, which gets accrued until you sell the property. So there's no early repayment charges, but the way they make the money is by, obviously, every month they'll add interest onto the loan. So that's why I was saying at the beginning, say if you start with 100,000, after 12 months, you could end up paying a sort of 110, 115,000. That's how a bridging firm makes its money, basically.
So if you repaid after 3 months or 6 months,
you'd only pay 3 months interest or 6 months interest. You'd only pay the interest up until the point you got to. The only caveat with most of them is that you have to pay a minimum of 1 month's interest. So if you took the bridge and you within 2 weeks you could pay it off, you would still have to pay the 1 month's interest and the product fee.
Nice.
Okay. Thank you, Sarah, for your question. Nice to see you. So, I feel like I've asked all my questions that I've thought of. Let me see. We've answered about being it a first time. Okay. Can bridging loans or secured loans be used for both residential and commercial properties, or are there restrictions?
Bridging, yes. Secured world, not so much. I can do residential buy-to-lets, but there aren't many lenders out there that'll do commercial secured lending. So a lot of it's just residential property, possibly switch to a consumer buy-to-let or a buy-to-let in secured world. But bridging wise, yeah, you can do commercial for sure.
Okay. Got a question. What are some common scenarios or circumstances when bridging loans or secured loans are particularly useful? So if this literally was somebody who was like at the end of their tether, they don't really know what to do, where could they get it?
I would say the thing that I see day in, day out, and it's pretty much a standard, is people that are in a large amount of unsecured debt. So it tends to be credit cards. They can be the bane of people's lives. I think a lot of people try and get 0% and then flip them. But eventually they get you. They know they're going to get you. That's why they put you into the credit cards. And then once you start maxing your credit cards out, it starts to have a negative impact on your credit file because it looks like you're over indebted. So if you get into a point where everything's feeling a bit too much, you're paying out a lot of money to these credit cards or loans, and it's struggling to get by every month without any money to yourselves, I would look at a secured loan option if you're a homeowner, because it's a lifeline. When you're struggling financially and you're paying out £1,500 and you've got an opportunity to pay £500 as a short-term fix, it's great. Bridging wise, I would say for property developers, it's really good. So if you're wanting to buy a property and you're doing the work and stuff, but you can work out there's going to be a decent profit margin, bridging is a great way to do things, because you can buy a property, use the bridging finance, and then do the work and stuff, and then sell it hopefully for a profit. Sorry.
Yeah, I get a lot of people. Can we do that scenario with a buy-to-let? Well, yeah, you can, but after a certain amount of time, the lenders are going to cotton on to what you're doing, and they're going to want to see rental income. So we've had it before with developers who I've referred to you, Mark, where we've done it several times on the buy-to-let, but they've not kept the buy-to-let. They've then not got any rental income. So when they try to do it again, it gets declined. So obviously, if you are doing short-term lending and flipping, it needs to be a product which is designed for that, which is bridging.
Yeah. Bridging for me is the right way to do it because if you know you can flip it within 6 to 9 months, it's not that costly. I don't think. And don't forget, like you say, buy-to-lets mortgages, they're not built for short-term lending,
No.
and they will cotton on if you do it quite a few times. And you just got to be careful, really. You don't want to get those sort of things blotted, do you? And then you get a bad reputation, really.
And the other big one for the bridging is obviously uninhabitable properties. So if you've not got a kitchen, bathroom, running water, that sort of thing, and you can't physically get a mortgage on it, like Mark said before, you potentially bridge, sort out the issues, and then remortgage straight away and get your mortgage.
That's right. Yeah, it's an easy way to do things, and a lot of the time, kitchens can be put in pretty quickly, can't you? So
Yeah.
you know, in sort of 2 or 3 months' time, you will be able to get a mortgage and get out of the bridge. So that for me is another good one as well for bridging.
Perfect.
Good. Well, if there is anyone watching that has got any questions, then I urge you to get those in now, as it looks like it's going to be the last chance. Oh, she snuck one in. It is the last chance to get those questions in, as I think we are going to wrap it up very soon. So last chance, if you've got any questions for Mark or if you've got any questions for Chris, get them in now. And they'll answer for them. They will answer them for you. Put your teeth in, Jai. On here. So, of costs escalate.
If costs escalate,
can you increase the bridge?
Possibly, you could revisit the lender and explain the position. Then they could come out and revalue the property, and see if there's enough equity to raise further finance on the bridge. Yeah.
But realistically, just because costs increase doesn't necessarily mean the value is going to change, does it? So you might be screwed. You might be screwed in that case.
Yeah, correct. Yeah, you're right.
Okie dokie. Is there anything else you guys want to add, discuss, mention? Anything else before we wrap it up, maybe?
No, I'm tired. I'm ready for my bed.
Oh, brilliant.
Night.
Hot set time and sleep.
Oh,
no, I mean, I think we've covered quite a lot there. I think it's been very good.
Yeah.
No, it's been really nice. Thanks for inviting me on, guys. It's been nice.
No problem at all. If there is anyone that wants to get in touch in regards to anything that's been talked about this evening, do drop us an email, admin@gomortgage.co.uk. If it's something that Chris and the team can answer, or if it needs to be passed over to Mark, we will, of course, get that passed over to him. And hopefully you'll find any answers that you are needing. But if there is any more questions that you would like, if you're watching this back, feel free, drop us an email, admin@gomortgage.co.uk. Message us on any social platforms. I'm on there to forward you to the right people. But yeah, I don't think there's anything else that's come in that I've missed. So I think we'll say goodnight, shall we, gentlemen?
Yep. Thank you very much, Mark.
Thank you very much, Mark. Thanks for coming along. And thank you, Chris.
You're welcome.
We'll be probably seeing your face next week. We haven't got anything planned for next week, Chris. It could just be a Q&A next week.
Oh.
We'll have a night off.
Oh, okay then.
Oh, we'll get the girls on. We need to get the girls on. Ready because I'm away on the 28th. So
2 weeks we've got without Chris.
Where are you going?
Okay. I'm only going to Lowood Bay for a night.
that's okay then. You can go.
Yeah, you're allowed.
Where am I the week after, John? Or the week before?
No, I mean that's in 2 weeks.
Right, sorry. I was going to say, where have you booked me? Where am I going?
Yeah, where are you off to? Yes, so Chris might be here next week. We'll keep you updated. He's definitely not here the week after, but hopefully I might get some of the girls from the team on the live. We need to speak to them. We've got Sarah, we've got Rhiannon, we've got Laura that might come and say hello, because otherwise it's just me and I'm pretty useless to be here on my Todd, so you never know. But we'll keep you all updated. Keep an eye out on all the platforms for upcoming posts, upcoming lives. Yeah, we'll say goodnight and thank you very much for joining us. Thank you, Mark. Thank you, Chris.
Thank you.
Cheers.